Morning, everyone. Thank you for joining us in the second of our series of webinars related to people, reward, payroll, and mobility. We're going to help you continue to navigate what's going on with all these areas. And there's been lots and lots of changes over the last few months related to what's going on in the world. And we need to think about how these will impact businesses on a practical basis with their employees. We thank everyone for joining this morning, and we will kick off very soon to go through the content. Now, with me today, we've got some wonderful advisors with us. We've got Robin Bailey, who's a director in our global mobility team. We've got Nicola Fraser, who helps organisations look after their payroll. We've got Christian Fell, who helps organisations with everything from pay gap analysis to workforce design. And we've got Jane Gilmore, who takes the lead on national minimum wage and on reward as well. Now, we've got a good session, a good discussion to go through. We've got no slides today, so it's going to be very much sharing practical insight, experience, and our observations on what is going on for organisations in the UK at the moment, and taking stock of what's happening with all the uncertainty in the world, so we can get hopefully some helpful conversations, some helpful tips for you who are listening today, and to just help organisations think about what they can do over the next few months and take that into their planning and strategy over the next few years as well. So this is recorded. Please feel free to ask questions as you go along. We want to make this both informed and interactive. There is a question box for you to post those in. And to kick this off, I'm going to start with my colleague Robin. And one area we have seen change, Robin, since our last webinar in April was the immigration white paper. What does this mean for mobility for employers?
Good point to start with, Ian. I think the first point here is I think we've got to qualify this white paper. It relates to inbound migrants, so people coming to the UK rather than outbound migrants. So when we look at the white paper, I think the main high level headlines are as follows. Look, the white paper is going to require migrant workers to be higher skilled, have a higher standard of English, be educated to a degree level, and it will also potentially require them to spend up to 10 years in the UK before they can apply for UK citizenship. So the rules have been tightened up somewhat. Additionally, firms, when they pay the immigration skills charge, that is going to be increased, that fee, by 32%. Now, when we look at those proposals, what it means for employers is it's going to make recruiting migrants from overseas to fill roles more expensive. And when they look at recruiting for entry level and graduate roles, they're going to have to focus more on the local market because they're not going to be able to fill those roles with people from overseas because they're not going to meet the requirements for that higher salary and skills level. Okay. Now, that being said, there's still going to be a need where you need highly skilled migrants. They're going to have to recruit those still from overseas, where there's a skills need or there's a knowledge gap that cannot be recruited from the local UK labour market.
That's brilliant, Robin. I think one thing to highlight here as well that I've seen, and no doubt you've seen as well, is HMRC. They're bulking up their numbers of advisors at the moment, as was announced in the budget last year. And one thing I've seen them potentially look at is benefits in kind related to immigration support. So organisations really need to think about, well, what reimbursement, what costs are we paying for related to immigration, and to establish whether they could be a benefit or not. For instance, the NHS surcharge,
Yeah.
what are we doing around visas and certificates of sponsorship? So it's best to take some advice there. I'm sure you've seen aspects of related to what people are paying as well when they're coming from overseas, or someone's in a move from the UK to another UK company but requires a visa.
Yeah, it's a good point, Ian. And one thing I would say is that employers should take advice in this area because
Yeah.
dependent if certain conditions are met, you can actually get tax relief for things like the visa costs and the NHS surcharge, provided that that person qualifies for the foreign income and gains and OWR new regime, or they're not resident in the UK and they meet certain conditions. So definitely something to investigate with your advisor.
That's great. That's great. And one thing that came out of a recent tax breakfast we had in our Leeds office last week was questions around the non-resident directors. We see them often, the revenue can see very quickly what non-resident directors there are through Companies House. They might be interested to see, well, are these directors of UK companies that are based overseas, are they coming to the UK? Is there any tax national insurance for these individuals to pay for companies to worry about?
Yeah, of course, Ian. I mean, this is always a point, and you've alluded to this. They can see on Companies House these details, and also whenever there's an employment tax review, this is the first thing often that a tax inspector will ask. So, back to basics. So, in the first instance, where you have a non-resident director, HMRC's default position will be 100% PAYE and national insurance to the fees or earnings that that non-resident director receives. Now, that's even the case, and this is where employers are often tripped up. That's even the case where the UK entity does not pay them a fee, and these individuals are instead paid a salary earnings from an overseas company in the same corporate group. What HMRC will say is they will attribute that overseas payment to the individual's director's duties in the United Kingdom because they see the statutory directorship as a separate office holding role that needs to be recognised separately. Okay. Now, that being said, if you work with your advisors, it is possible so that you can obtain a partial relaxation of PAYE income tax on the portion of the director's earnings related to their UK work days. That can be obtained from HMRC. That's called a Section 690 direction, and my colleague Nicola may touch on that shortly. The other thing is, it is possible sometimes to make an argument if when the director comes to the UK, they are undertaking either investment activities or they are not undertaking fiduciary board duties, you could make an argument that there is a relaxation on PAYE on 100% of their earnings, but that is a very complex area that you'd need to take advice on. I think the final point is on national insurance.
Yeah.
National insurance is often forgotten about for all employees and directors, but you can obtain some relaxations on national insurance if the director is either socially insured in a country that the UK has a social security agreement with, or if the UK doesn't have an agreement with the country the non-resident director is resident in. If they limit their days in the UK, they may meet the threshold conditions for a special concession that HMRC has for non-resident directors.
That's really helpful, Robin. I think it's a good point to bring Nicola in as well, because it does sound complicated, all the things people have got to think about. So from a practical payroll perspective, Nicola,
Yeah.
what happens there?
I mean, as Robin has mentioned, there's so many special and careful precautions that need to be taken when the non-residential director for a UK entity. So making sure that these considerations have been undertaken, but also there is things that are just need to be done as part of the payroll process. So for example, when a director is added to a UK payroll, the director indicator should be ticked when they're added. This lets HMRC know there is a director on the payroll, and also how the NI is calculated. Director's NI calculates differently from a standard UK employee where it runs month on month. They have an annual earnings period, so that indicator is really important to make sure that their national insurance is calculated correctly on the payroll. And as Robin mentioned, if the non-residential director does apply for an S690, a portion of that salary would be non-taxable. And that's something that they would have to agree with HMRC to get that certification. So that would mean that part of the salary for the time worked in the UK is fully taxable. There could be a portion of it that doesn't qualify for PAYE tax. However, that would have to be applied for, and a certificate would have to be put in place before it can be actioned on the payroll. If that certificate's not in place, the full PAYE would be applied until that is received. And then as I just mentioned, the portion of the salary for earned in the UK would have to be applied for tax and national insurance in the normal way. But as Robin mentioned, there's a lot of precautions to take. Nothing, any exemptions that goes through, it has to be applied for and the appropriate certificates in place with HMRC to avoid any backdated claims of incorrect calculated tax.
And I suppose there, Nicola, and it might be one to bring Robin in again on here, we're going to have to think about whether they're potentially qualify for a personal allowance, the directors as well, and whether they're going to be category X for national insurance or category A for national insurance, X being potentially that they wouldn't pay it over here because of certain agreements that they've got. Do we see that from a practical perspective as things to watch out for as well?
That's something that Robin and I actually collaborate quite a lot on as clients, where those special circumstances are in place. When it comes to the payroll aspect, we always look to Robin's team for their expertise to make sure that the appropriate applications have been completed on behalf of the client, that the appropriate tax code that can then be applied, and if the NI category X is applicable, that then we can add that to the payroll accordingly.
Yeah, it's always a minefield, isn't it, Nicola? Each case needs to be looked at separately in terms of you look at the individual's residence, where they're socially insured, look at double taxation agreements and their circumstances. It really is case by case.
I think one thing here as well, just as a reminder from me from an employment taxes perspective, where you've just got a normal UK director or non-executive director based in the UK, is making sure that the pay for those duties is put through payroll. This cuts beyond IR35. Anyone who's being paid for directors' duties should be on the payroll for those from a UK perspective. So please do watch out for that, because that is an area we pick up time and time again. One thing I did want to get onto next, Robin, if we're sticking on the overseas, I'm going on to the summer holiday theme here. We have had some businesses in the past where there's employees that have asked, well, I'm going on holiday. I'd like to extend my holiday. Might be going back to see family or wants to do a longer vacation. Can I take my laptop and work from overseas as well? What do you need to watch out for there? I'm guessing, given we're probably a couple of weeks away from people going away for some period over the summer.
That's a good point. Good point, Ian. And I think this has been a theme, especially ever since COVID-19. But it's always been an issue, I would say. I just think there's a little bit more awareness.
Yeah.
What I would say to employees is just be aware of the tax, immigration, and other regulatory compliance obligations that might be tripped if you have an individual that works overseas, even if it is a staycation, an extension of their holiday. And what I've done for the last 4 years or 5 years now, because I'm thinking of COVID-19, I've worked with a lot of employers to help them manage these obligations. And this is very much can be seen as an incentive to employees as well. How do you do this? You put in place something called a remote worker policy that also covers staycations, where the employees can blend holiday and work. So as I said, they can be promoted, these policies, as a positive benefit that's designed to attract and also retain employees by allowing them to work remotely overseas for a set number of days. This is going back to those tax thresholds again, okay? And on the proviso that they only undertake certain activities whilst working remotely overseas. Again, this is about tax. You don't want them to create a corporate permanent establishment in another country and expose the company to corporate income tax in that country. That would be a disaster. Hence why you put these limitations in place. As I said, the day count and substance thresholds, they're based on limits that if they breached, it can mean that there are tax, immigration, social security, or other legal compliance obligations that could arise for you as the employer. And by putting in place the limitations in a remote worker policy, what you can do, you're blending really the balance between recruitment and retention, ensuring that you're compliant and also mitigating the cost of penalties for non-compliance. Because if you inadvertently get this wrong, the last thing you want is a penalty for non-compliance. And from an immigration perspective, you can even get into things like criminal penalties and employees not being able to come back into that country again that they work in. They could be chucked out of the country. So, or also the employer fine. So definitely something to be cautious of and think about putting a policy in place.
And I suppose that goes where, say you're an Irish company that's set up in the UK, but Irish employees coming across to the UK, spending days on holiday, they might need to think about short-term business visitor agreements, even if these people are coming on holiday, but to work as well a little bit.
Yeah, I think there are two points on there, Ian. So when you look at short-term business visitors, that applies if you have a UK company hosting the Irish employees. And
Okay.
and one thing to think about with UK Irish employees, there is actually an agreement between the two countries that allows people and employees to move freely, which is effectively like a visa waiver. I've forgotten the name of it exactly, but you don't need a visa. If you're an English person going to Ireland or an Irish person going to the UK, you can do that freely, work and live in those two countries.
And Nicola, just from a payroll perspective, where we might have people coming into the UK from different countries, what are the sort of practical aspects to look out for there?
From a payroll perspective, it depends if we're going to put them on the payroll as an employee. And if that is the case, then if they do any work in any other countries, we would liaise with Robin's team just to make sure if there's a tax treaty in place, if it's someone who maybe is going to be doing a bit of flexible working, making sure that, again, those exemptions are correctly in place. But from a practical adding them to the payroll, it would be the same as adding any standard
Right.
employee to the UK payroll. It's just if there is going to be that cross-border working, making sure we've spoke with Robin's team to make sure that everything is correctly in place.
Thank you, Nicola. That's really helpful. And I'm gonna bring Jane in here as well because when we've had people traveling from overseas, one question we've been asked recently was, well, are they subject to national minimum wage rules in the UK? I don't know, Jane, whether you could just pick up on that a little bit.
Yeah, sure. Yeah. So yes, they are, even if they're in the UK or if they're one day, and they're performing duties, they do need to be paid at national minimum. The pay that they receive needs to be at the national minimum wage entitlement. Obviously, if you've got non-exec directors just coming over for a board meeting, carrying out office holder duties, they're exempt from national minimum wage. But if it's a UK company or they're coming in from overseas, carrying out work and performing duties for that business, national minimum wage entitlement kicks in. So we do see, quite a common failing being that short-term businesses coming in on a 3 6 month secondment, but they're still being paid in their home country. Their salary is paid in their normal home country. And when you convert that then to work out what that equates to, it's not actually enough to cover their entitlement for national minimum wage in the UK, even though that they may be being paid allowances such as accommodation, cost of living, and they get their expenses paid. Those elements don't count towards national minimum wage. So converting their salary into pounds is then not sufficient to cover national minimum wage, and that's caught out quite a few cases that I've seen in the past, and they've had to rectify that. So a good point is to sort of maybe have a look at how you're structuring your whole
Yeah.
remuneration package for short-term business visitors and try and get in as many of those elements as a element that counts for national minimum wage rather than paying them as allowances, and then it just covers you then for your compliance.
That's really helpful, Jane. I'm going to bring Christy in there now because what we've discussed so far is lots of movement, mobility, lots of things to think about from a payroll perspective. And also, Jane then brought in some really good points around reward and strategy there. Christian, what should businesses be looking at there from a workforce structure perspective that you see from more from a consulting side, perhaps when you're going to help businesses think about what they're doing and what they're doing right and wrong?
Yeah, I mean, what Jane, Nicola, Robin have shared there, kind of captures just the level of turbulence that we're seeing at the minute as organisations do start to think about, well, how do we structure ourselves from here on in? And when we think about organisational design, we are often talking about the structure of an organisation, the roles and responsibilities. How do we make sure we have the right capabilities in house to meet the demands of the future, and we set up for success? We're seeing more and more organisations at the minute want to take part in that conversation and gear themselves up. We know that we've encountered an awful lot of change over the last 5 or 6 years in the way that organisations operate, and we've been forced through a lot of that change. We are also seeing an incredible amount of change now that are impacting employers and employees as well, and we're gearing up for that in a fairly challenging external environment. There's a really interesting piece of research that Gallup, and for people that are familiar with Gallup do an awful lot of the engagement surveys across the world. They released some research saying that employee engagement at the minute has dropped by 21% in the last 12 months. Now, the impact that that has on productivity is incredible. You know, we talk often about kind of millions. We're talking about billions here, and if we look at the UK market as well, Nottingham University are doing some fantastic research around this. Not just how we're still trying to come to terms with hybrid working, which, even though we're very familiar with it now, we're facing new struggles with it as it is more embedded into organizations, but the integration of AI into the workplace as well, where that leaves employees. We are really in this melting pot at the minute of a lot of change, but that change presents some great opportunity for organizations to think, how do we position ourselves going forward? From an employee perspective right now, it's quite confusing. I think the feedback that we're getting when we're out and about speaking to organizations is a lack of uncertainty of what does my future look like. And I think that's a step actually that businesses can look to take, having really clear plans, or as clear as you can get, as to what your next few years does look like, what strategic direction you're heading in, and how is that going to impact my workforce.
That's a really good point around how you provide clarity and some transparency on plans for the future there for employees, and what you can do around restructuring potential packages to help organizations and employees feel rewarded, and also try and save some costs from tax and an NI perspective, I suppose, as well there. I'm going to bring Jane back in briefly, because obviously we've touched on national minimum wage, we've touched on reduction in production there with the 21% number that Christian did. We have seen a major update from an NMW perspective on the publication of a naming list. I don't know, Jane, if you want to talk about that, because that may have some impact on how productive people feel, where they not feel like they're being paid when lists like this are published.
Yeah, absolutely. Yeah, I think it just highlights, highlights for businesses that they're not alone out there. The naming list that came out last month was very long awaited. It was 18 months since the last one was issued, but with everything going on over the past 18 months with government, not surprised. But yeah, that famous list finally came out, and it named over 500 employers for failing to pay, over £7 million worth of wages to over 60,000 workers, and those were as results of HMRC inquiries, and it spanned as far back as 2015. So, it's like almost 10 years ago that some of these businesses were investigated, and they're only now have been named and shamed for it, which is one of the downsides of this naming publication. It's also interesting to note that some of the regions in there as well as high-profile names being on that list, which a lot of people don't expect to see. It's always surprising to see such high-profile names on that list, but it just goes to show, that anybody can be caught out. It's not just those employing businesses that are deliberately not paying national minimum wage, but it's every business, and even if it's not, an unintentional error, they are being caught out. Should HMRC come knocking on their door, they will probably find something, because they do dig deep. But yeah, just the regions that were the highest numbers were London, the Northwest, and Cumbria had the highest population of businesses named, closely followed by North Yorkshire and Scotland. That some of that may have been, been the geographical compliance. That wouldn't have kicked in just yet. But it just goes to show, that it's widespread, it's national, and some of those common reasons for the underpayment were around deductions to wages, not paying for all of working time, and apprentices were in there as well.
Great. And Nicola, I mean, payroll have a role to play in NMW compliance. What do you see from that angle?
I mean, from our perspective, the most important thing that any payroll can do is check every single cycle. The national minimum wage must be checked, and it's not just things like the age of the employees, like Jane mentioned. What kind of deductions are on that payroll? Have they got salary sacrifice that are taking them below? Is there a deduction for uniform, for example, that could take them below? There's all these factors that probably businesses don't consider. They're thinking about the age of the employees, but actually there's a lot more goes on in the background that needs to be considered to be compliant with national minimum wage. And those ongoing checks, not just in the April payroll when the changes happen, but every single time, whether it's weekly or monthly cycle, the national minimum wage should be a key part of the checks in the process.
That's great. And I suppose, Jane, as well, I mean, we always discuss between ourselves and with clients that it's a bit like an iceberg, minimum wage compliance. And payroll will only see an element of that. So you can't be reliant purely on payroll teams to look at minimum wage. Where else were the liabilities coming from that you need a wider team to potentially focus on?
Yeah, well, payroll don't see everything that's going on within the business, and it's not just down to the payroll to check the compliance. There's many stakeholders within the business that need to take responsibility for making sure that everything is being identified as a risk and then being fed back to payroll. Payroll do an absolutely amazing job. They've got a big job on their hands, and they can't do absolutely everything, and they can only deal with the data that they are provided with. So it's a good starting point for businesses to have a look at what is happening across the business at the coalface. What are their policies saying? What is expected of workers? And are they able then to fully demonstrate that they are paying national minimum wage and their payroll getting all of the information that they need to factor into the payroll and do that check so that it's as robust as possible? Should HMRC come knocking at the door, at the end of the day, it's down to the business to prove that they are paying national minimum wage. And if they're not, then unfortunately, it may be that they'll end up on that list at some point in the future.
I know one thing when I was probably earlier in my career, I was doing some checks at retail stores, and one of the local stores had implemented a policy that was different to everyone else, where they got people to sort of spin a wheel to check whether they'd have their bag checked, their locker checked, or themselves checked, or their car. But that time, because head office didn't really know about it, but that time payroll wouldn't know about it. Could potentially be NMW time, I would imagine.
Yeah, absolutely. Anything, that a worker is having to incur from, even if it's before they have clocked on, if it's an expectation that, the employer is requiring of them, well, then it's working time. I've been involved in many investigations where we've been arguing with HMRC over, the number of minutes that it takes somebody to change into a pair of Wellington boots and an overall. And it does come down to that nitty-gritty detail, because at the end of the day, it can cost a business a lot of money to put any mistakes right. And the consistency across a large organization as well. I've seen it so many times where different parts of the business are interpreting policies differently. So there's no consistent approach. So it's really good advice to sort of centralize your policies and your comms, review them regularly. They are a working policy. They do need to be checked, and they do need to be seen that they are being enforced, and making sure that they're communicated as well, not only to your team, team leaders, managers, supervisors, but then cascaded down to the employees as well, to make sure that they're understanding it as well. A common one is, like you say, where they're expected to wear, the black shoes is the most common one. Say, you have to wear a pair of black shoes. So everybody runs off and buys a pair of black shoes, when in fact, the employer can actually provide them. So it's making sure that understanding is out there across the business, so that, these unintentional mistakes are not happening. Because, there's financial penalties, as we know, which are huge, 200% of an underpayment, and then the worst of all, it is going on that naming list. Nobody wants that.
That's really helpful. That's a great share as well. And I think we also touched on salary sacrifice a piece with Nicola. I know between probably myself, yourself, Jane, and Nicola, we're doing quite a lot of salary sacrifice implementations for things like cars and pension at the moment. Great things to do because it can save national insurance, but it's really key to manage that eligibility from a national minimum wage perspective for both hourly and salaried workers. And I suppose separately there, we have seen the government did publish a paper about a few weeks ago that looked into whether they should consider taking away some of the advantages with pension salary sacrifice. be very, very complicated and administrative to do. There was a scenario that looked at whether it should be capped at a £2,000 national insurance advantage. It was commissioned by the Conservative government in 2023. It's only recently been published. We will watch out on this one. We do see rumours before every budget about whether pension salary sacrifice could or will remain. So let's just see. But it does look, it wasn't really well received, I would say, that survey from the feedback we saw on it. But there is quite a lot of talk on socials about it. That's great. I think just bringing, we've talked a lot about kind of pay governance there. And one thing I wanted to bring Christian back into was what you see from a pay gap analysis perspective, Christian. What changes have we seen there recently, and what are we doing? What should employers be doing?
Well, the pay gap world is very excited at the minute, because since gender pay gap reporting was introduced in 2017, we've been clamoring really to formalise better reporting around it, not just reporting of the numbers, but actually what are organisations doing behind the scenes to try and impact those numbers. Since 2017, where there was a median pay gap of 9.1%, it's dropped to 7% in 2024. So we're moving in the right direction, but for any organisation that has that regulatory requirement to produce a gender pay gap, and that's any organisation with over 250 employees, the big change that they're now going to face most likely is the need to produce an equality action plan to go alongside that. So that will be now a real requirement to show what you are doing behind the scenes, what actions do you have in place, and how are you implementing them. It's going to create an awful lot more transparency around what organisations are doing to differentiate themselves, what they're putting into place, and how they're really kind of harnessing the opportunities within their organisation to improve gender pay and equality across males and females within those organisations with over 250 employees.
That's real. And where do you potentially see? Do you think there'll be changes in the future here that require more employers to be more transparent with pay? Because I appreciate it's not a group wide definition, is it? Gender pay gap. It's an entity by entity basis.
Yeah, there is. That's where the trend is going.
Yeah,
it is more transparency around this, and whether that at some point expands to ethnicity pay reporting, equal pay reporting, which is very different than gender pay gap. We will see, and we're closely following EU directives. We're very interested to see what comes through from the Employment Rights Bill.
Yes.
What we are definitely seeing is organisations taking the onus on themselves and saying, actually, regulation aside, we want to create this environment within our organisation. We know that having better transparency is good for us. It's good for our employees. We touched on engagement a little bit before. This all feeds into employee engagement, the culture of you as an organisation, and are already now starting to get ahead of the game a little bit and look to put these plans in place. If this is passed into law, then that's something that naturally is going to accelerate, and there'll be wide discourse around this. But right now, what organisations can do is be working with their HR teams to start thinking about, well, how do we do this right now? Because most organisations probably have something that touches on it, but there's going to be a need to formalise that into a proper action plan.
And we're talking about pay here. The other thing that we're seeing movement on, I suppose, is benefits. And I think, Nicola, we saw the payrolling of benefits in kind deferred. It's welcome deferral, I think. Do you want to just explain a little bit about that?
Yes, so from 2027, April 2027, the P11D, most of them, not all, there is some aspects that must still remain on the P11D, but most benefits, healthcare, etc., will move to payroll and benefits. And that means that the tax and the liabilities for that benefit is taken in real time via the payroll. Now, ahead of that, businesses should really be reviewing what's on their P11Ds and making sure that they're reporting everything accurately currently, so that when we transfer, that the transfer again is accurate. There's nothing missing from the reporting. You probably need to consider what software is in place and making sure that the provider is ready for this change, because it will be a significant change for businesses. And also, I would highly recommend communicating to all employees that this change is coming. The pay slips will start to look different from that period, and you don't want to wait until just before it goes live to start communicating this to your employees. You want to give them a heads up, making sure they're prepared, and it will help mitigate the volume of queries that will likely come your way when this goes live. What I would recommend as well is consulting payroll or employment tax specialists who can give calculation examples and what pay slips are going to look like. So this can be shared with the employees in the business, and a visual expectation can be given to everyone. And then also as a reminder, and people who already do their P11, the P11Ds will continue to do that on the 6th of July. People who already do payroll and benefits currently, the P11DB is still expected to be submitted by the 6th of July. So even with payroll and benefits, there is still a P11DB that has to be submitted by the 6th of July.
Yeah, and we are in the midst of that at the moment. So a few weeks to go to submit P11Ds by the 6th of July, to submit PSA agreement applications for the 6th of July, and get those ERS share scheme type returns in as well by the 6th of July. So it's going to be a busy few weeks for some people, I believe, and obviously we're helping a lot of organisations with that at the moment. I think from our perspective, there's been some really good conversation there, some really good tips. What I would want to do is just go round everyone and ask for your kind of key takeaway. And also, because we are already seeing autumn budget rumours starting to get into the press, what would be your potential prediction there? So as Nicola is on my screen, I'll start with Nicola.
Yeah, so my key takeaway from today is careful considerations. As national minimum wage legislation continues to evolve, careful considerations surrounding that, and as well with up and coming changes to payroll and benefits, making sure your business is prepared. For the up and coming budget, there was quite a significant change to impact payroll from April with the change of employer NI to 15%. I don't see anything as significant as that happening this time round, although they could surprise us. The biggest thing that I'm keeping an eye on at the moment is the Employment Rights Bill. That is they're going through consultation at the moment, and the items that they're noting on that as it goes through consultation will impact payroll. So day one rights for sick pay, paternity pay, things like that. So keeping an eye on those ones at the moment.
That's great. I'm going to turn to Robin next. Key takeaway and prediction.
Okay, I'll go for takeaways, Ian. Okay, I'll look at the 3 areas we spoke about. On the immigration white paper, I'd advise employers to assess and evaluate the potential revised, more expensive costs of hiring migrant workers, and whether the changes are going to impact the type of workers you can recruit from overseas. If we turn to non-resident directors, identify any non-resident directors you have and assess whether the correct PAYE treatment is being applied to their owners. And finally, on remote workers, if you don't have a remote worker policy in place, recommend you do that so that you can attract and retain staff and manage your compliance obligations where employees work remotely overseas. Budget prediction. Expat is always a funny one. We tend to have either big announcements or nothing at all. I suspect, if anything, Ian, the rules on overseas workday relief and foreign income engaged regime, they were obviously released in the last budget. Yeah. But from looking through them as an advisor, I think they probably will need some tweaks here and there. As you can imagine, if any new legislation, things get missed and there are some unintended consequences of any new legislation. So I think probably will be some tweaks around that in the area.
Hence why the tax legislation keeps growing every year, Robin. Yeah.
There's always those pictures of those yellow books online that they showed them in the big piles.
Yeah. I'm next going to go to Jane, if that's okay.
Yeah, sure. So yeah, if you take one thing away from today, go away and look at your, policies and your operations. Are you confident that if HMRC were to come in tomorrow, that you'd have a squeaky clean bill of health in terms of your NW compliance? If you'd go away, review, find any mistakes, you've got a perfect opportunity to put it right before HMRC come knocking, and there'll be no penalties, no naming. So that's a good takeaway, is to go and have a look at it. prediction for autumn budget as well, not so much a prediction, but they'll announce the new rates for 26-27 for the new national minimum wage and national living wage rates. At the moment, they're looking around about £12.50 to £12.80 an hour. So again, it's not quite as big a jump as in previous years, but it's still a big increase, because you're now looking at, a basic salary of between 26 and 27,000 pounds a year, for 40-hour weeks. So, and that, that's just starting rate. So, it's yet another cost for businesses to absorb. So it's always good to maybe think ahead and start planning for that coming in next year.
That's great. And Christian?
Yeah, I mean, similar to Nicola, I'm waiting on the what's to come with the Employment Rights Bill, and whether that is formalised before the House of Lords goes on recess on July 22nd, I think, to see the impact there. Either way, organisations with over 250 or entities with over 250 employees will have to continue doing their pay gap reporting, and will most likely have to create these equality plans. So if you fall into that category now, then it's well worth thinking about what steps you would take to get that into place. And all of this, for me, that there is an awful lot of change here, and all of this change is going to impact employers as well, but employees at an individual level. And there's a real opportunity here as an organisation to be clear about the way in which you want to communicate this out to your workforce. I think that by working together with HR, payroll, finance, your relevant people out of these teams to deliver a very concise message to the different personas that you've got in your organisation, the individuals that you've got there, to say what this means to them. Because we can all jump on Google or various search engines, we can watch the news, or we can join webinars like this, but it's confusing, to the majority of people out there, and particularly those that aren't working in this field. So as an organisation, I think we've got a real opportunity to build on that engagement and trust with our teams by letting them know what it means to them.
That's very wise words, and thank you, everyone there. I think from my perspective, there's going to be a few things to watch out for, but like everyone said, compliance is key. HMRC are getting more inspectors, there's more reviews taking place, benefits, expenses, the things like staff entertaining costs, relocation, IR35. I've nearly gone through a whole webinar without mentioning that. Those are the things that are going to be important to be compliant on. And I think from a prediction perspective, we're seeing lots of rumours about tax changes. Will there be will the government go back on the word on certain things that they announced in the last budget? Will there be new tax rises to look forward to? Could we see the additional rate of tax increase? Could we see things to do with apprenticeship levy increases from 0.5%? Let's see what happens there, I would say. But those are things I've got my eye on at the moment. So I'd like to thank all my speakers. Done a great job there. We have had a few questions that have come in during and before this session. Some of them are more pointed and some direct answers. I'm going to start with Jane on national minimum wage. The rate at the minute, there's different rates for minimum wage. Do you think we'll see one rate for everyone who's over a certain age at some point soon?
Yeah, I think it's already sort of going that way now, isn't it? Where it's over 21s, and then you've got the 18 to 20 rate, and then you've got an apprentice rate, which aligns with the youth rate, 16, 17-year-old. We're already looking at bringing down that over 21 and over rate down to 18 and over. I think that's going to come in over the next couple of years. The Low Pay Commission are already sort of factoring that into their reviews and consultations. So I think in the next couple of years, we're going to just see 18 and over and an under 18. I think apprentices will just then be aligned with 18, under 18. So we'll just have two rates to contend with, not the multiple ones that we have had in the past, but we've still got at the moment.
That's great. A nice mention of apprentices, because I'm going to go back to Nicola on a question we've had around sort of apprenticeship levy and employment allowance.
Mm-hmm.
What's happened there? Because there was a change in April, but what are you seeing from a payroll perspective, and what do people need to watch out for?
Yeah, so apprenticeship levy, there's the 15k allowance. If you have multiple entities, you can spread that across those entities, but it is capped at the 15k. The one though that stands out that I don't see a lot of businesses claiming for is the employment allowance. Because that 100k cap was taken away from April, there's a lot of businesses out there that don't realise that they qualify for this now. And most payroll softwares, you have to choose to put the allowance in the payroll. It's not an automatic process. So there could be a lot of businesses out there that are missing out on 10k a year to deduct from their PAYE bill. So if there is anyone listening, please go and check your software because you might not have applied for it this year and you could benefit from that 10k allowance.
I think the one thing I'd add to there is that we have seen with some organisations that are perhaps part of a group but work autonomously from each other. You really need to talk about how you're sharing those allowances across the group,
Yeah.
because if you're all claiming it, you may have overclaimed, and then there'll be disclosures to make to HMRC for that. So that's a really important thing to do. And just to pick up on apprentices, we have seen the government announce aspects to do with apprentices, particularly to do with apprenticeships that are level 7. So they will potentially no longer qualify for the apprenticeship levy funding from January 26 if you're, I think, 22 or over. So that'll be something to watch out for. But we still have the national insurance relief, don't we, Nicola, for
Yeah.
people that are qualifying apprentices under the age of 25. So that'll be an area to watch out for as well, I would
Yeah,
imagine.
so those individuals will still be on category H, and so they'll still get the employer NI relief via the payroll.
That's wonderful. I've got I think I've got 2 more questions here, and they fall for Robin and one for Christian. So I'm gonna start with one for Robin. So where I think just going back on what you were saying earlier, Robin, where we've got say an employee coming from Ireland to the UK, and they're coming over, let's say twice a week, and they live in Ireland and they work in the UK regularly. They potentially will have Irish and UK payroll obligations then, won't they?
Yeah, that's correct, Ian. I mean, it's going to depend on who the employer is, okay, and also what their pattern of work is. So I'm assuming with the question, we're assuming that this is a UK employer, I'm guessing, given the flavour of what we're talking about here. Then yeah, there'll be, in the first instance, it will be 100% UK PAYE income tax and national insurance. But if they're an Irish resident, based on that working pattern, it's probably likely that you could restrict UK tax to the portion of their pay that relates to their UK duties, the Section 690 we mentioned previously. And on the basis that they'd undertake at least 25% of their work in Ireland, the employer could obtain something called a certificate of coverage, or A1, so that they only pay Irish social security on that individual's earnings. So straight away, this is all getting very messy, because suddenly, as an employer, you're going to have to operate a shadow Irish payroll to account potentially for Irish social security and Irish tax, a UK payroll to actually deliver the pay net of UK tax on pay related to UK duties, Irish tax on pay related to Irish duties, and then withhold Irish social security and deliver the net pay via the UK payroll. So that's quite an intricate puzzle that you need an advisor to help you put together.
That's good advice, I think there. And lastly, Christian, I've had a question come in around pay gap analysis. Is it all pay and benefits that would be included in pay gap analysis, or is it just certain pay and benefits that would be included?
Yeah, we'll be looking at pay and bonuses primarily. We will factor in certain benefits dependent on your setup, but it is something that's very much worth making sure that you're speaking to your payroll team or your outsourced providers, and something that we're very happy to provide advice on. But the most important thing here is that you're applying the same methodology year on year out. Where we have seen some clients come unstuck is where they've changed that approach year on year, which is yielding different results. And what we want is to set a baseline and make sure that we can show what the real trend is.
That's fantastic, and thank you for answering those questions, guys. It's been great to give some practical insight and experience in relation to that. I think all that's left is to thank everyone for listening. Thank you everyone who was speaking as well. Wishing everyone a happy summer. We do have a webinar coming up on business relief on the 16th of July. That's going to be hosted by Paul Barr and Madam Cooper from our wider private clients and our valuations team. So do feel free to register for that. And our next webinar will probably be post autumn budget now. Will it be on Halloween? Will it be in November? Will it be in October? Who knows? But let's make sure we are attentive to that, and I'm sure there'll be a lot to talk about. Do feel free to get in touch with us in the meantime. We're very happy to talk through any areas you'd like to have advice on, whether it be something that's immediate related to benefits and expenses reporting for the 6th of July, or something you're looking to take more of a strategic view on. But again, thank you for your time, and have a good rest of the day.